Let's just start with the carbon market. Let me give a small game for you. Imagine a game where everyone has to share air which we breathe. That's the game. Okay, we have to share. We are locked in a room, which is secluded, and completely we have removed the air from that room. We have only limited air which has been supplied in that room, where everybody has to share that to breathe ourselves. So it's a life and death situation for all of us sitting in a room. Imagine that. Now, some people are oxygen guzzler. So they are basically taking too much of air. Specifically, imagine them as a factories. In the room where we are sitting, there are few people who are factories and they are making some toys. Yeah, they require a lot of oxygen compared to how much we need. Another definitely need less, right? If you are converting into machine is using oxygen and converting into some toys, etc. It requires a lot of air. That's the imagination. Now, to make sure that no one uses too much oxygen, what the owner of that room, or the person who is controlling it, he brings a system. And the system is that it makes sure that no one uses too much air so that it hurts other who is sitting in that room. And that's how the earth works right now, right? We are trying to bring carbon markets specifically to make sure that such kind of mechanism is there. The people who are really taking too much oxygen compared to the people who really needs it taking it, there has to be a system to make it fair. This is exactly like carbon market. Now, what is carbon market? Market is like big trading system. It's the way to help people and companies to make less bad air. That's the part of the stick, which is called carbon or greenhouse gases. So you do not emit too much, which warms up our planet, right? We know the end game when we were looking into our first session. Here is how it works. Each company gets a ticket called allowance. The moment you enter in the room, that room, which is controlled in a fashion which looks like a carbon market, you get a ticket. Yeah. That ticket is allowance. In the carbon market terminology, we let you know allowance of permits because each company gets one permit that says it is written on that ticket that how much of bad air you can emit. So your allowance is given that so much of ton of bad air you can emit. And of course, in relation to that, so much of good air you are consuming. Then it makes, if they make less air than what is the permit tells them, of course, they can use that, but the leftover allowances to trade and get money out of it from other people. Yeah. And they can sell it without any, sell this extra at a price which is there prevalent in that market, in that room. So the buyer can decide how much to pay for it, and seller can sell at the price which market fixes is. So the controller doesn't control the price. However, in monologue, I have recommended that government need to fix a bottom line. Government has to bring that, because if you don't do that, you keep it a market to decide. Countries like India do suffer, where the awareness and the registration, etc., is very difficult. You suffer with a lower prices, and you do not encourage people to reduce their bad emissions, and also you do not encourage people to sell whatever is left over with them. And if they need more ticket, the guy who took one ticket and he consumed more carbon, yeah, he's emitting more carbon in the room, then he need to buy from the market itself. So from allowance, if he exceeded the allowance, simply they have to buy from the market. And that brings two type of market now. The first market is the compliance market, and second market is the voluntary market. Compliance markets are generally called rule-based market. Yeah. Think of it like a school rule, which you must follow them irrespective of, you are a good person or a good kid or a bad kid. If you not follow it, stick is ready by the teacher or the principal roaming around in your college. Big company have to use fewer tickets to make the air cleaner. That's the basic fundamental there. If they break the rules, they get in trouble. In Europe, there is a rule that factories can only make a certain amount of bad air. Yeah. Choice, and the second one is the choice market, or in simple terms, we know them as a voluntary carbon markets. Choice market is what? This is like being extra kind. Company choose to make air cleaner even if they don't have to. So they are not forced to do it, but still they do it for the purpose of being kind to the society. They can buy good air points called carbon credit from places doing helpful thing like planting trees, making solar energy for others. These kind of activity, if you do voluntarily and collect those good carbon points and means contribute to the extra cleaning of the air and reducing the GHG emission in environment, you are working in voluntary carbon market. So voluntary carbon market, as you can see on the screen, that supports the sustainability through voluntary offsets. So these are just additional offset. Nobody has put you in the compliance or in the rule book. While the compliance market achieved through regulated emissions. Why it is important? Understand that carbon market helps making Earth a better place for everyone, irrespective of they are a producer of a toy or they are a consumer of the toy. They encourages people to use clean energy like wind and solar. They encourages people to plant more tree that breathes bad air and releases good air. Creates cool new idea that helps the planet. Yeah, these are the three major important point why this particular topic is talked about that. Yeah, another example you can take. Imagine that you have 10 balloons to share at a party. Would you use them all up or give some to your friend? That depends upon how kind are you as a kid, right? How kind are you as a person who is calling other kids to your party? Yeah, they teach us that share and care for particular earth. That's what carbon market is all about. Let's go and understand what is the cap and trade system. Cap and trade system works on a basically on a basis of market based approach, which is designed to control the greenhouse gas emission, where regulatory body sets a cap for that particular industry, which we heard in monologue as well, right? And then you limit that emission, that this is a maximum emission, and that also comes from again your NDCs. The country has its own NDC, right? So based on that NDC, this year we want to emit so much or want to maintain, because there is a limit of greenhouse gases, that 500 gigawatts, gigatons of carbon dioxide you can emit in the environment. Beyond that, of course, you will increase the temperature by 2.5 degrees Celsius, pre-industrial level. That limit which you set for your own self based on that particular sinks which are available with you, you decide how to work on the cap. Then there is allocation to the allowances, which again government does to the company. Once companies are allocated this emission allowances, which permits them to emit certain amount of greenhouse gases, they come into a trading mechanism where the company that manages to reduce their emission below their allocated allowances can sell the excess part which is left with them. And here, very good example was a manufacturing company in Germany. Just imagine that you are a CEO of that Germany company, which produces automotive parts. Okay, this company decides to invest in a energy efficient technology, such as upgrading its machinery with a less energy usage. They can produce same amount of same volume of automotive parts which they used to in past. But as a result of this, company has significantly reduced the greenhouse gas emission. Now understand that he is doing this. Why? Because he is going to work inside a cap and trade mechanism where his target is first to reduce the emission. which is after implementing these energy efficient process, the company finds that it has reduced its emission by 1,000 tons of carbon dioxide per year, where he used to produce carbon emission every year was 10,000. So 10% reduction is straight away. Under European Union emission trading system, you as a CEO of that company will get allocated certain number of emission allowances. Yeah, and based on your historical emission, which was 10,000. Now you were allowed to have 10,000 carbon emission to be done. This year, you only did 1,000. Yeah, you reduce it by 1,000, so you only did 9,000. Now the 1,000 ton of carbon dioxide emission allowance which is left with you, what will you do? In that cap and trade mechanism, you will sell that 1,000 tons of carbon dioxide into the market and earn additional income for your company. Now compare that income which you generated versus the upgradation of machinery which you did. You might have done a so $1,100. What is the amount? We are talking about $1 lakh, right? $100,000. 100,000 you earn, you might have invested $1 million to upgrade. Yeah, upgrade will require capital investment, right? Capital goods. Now $1 million I invested, but I got benefit of 100,000 in 1 year. So within 7 years, I can recover my whole amount. Yeah, according to the compounding nature of the excess allowances. This is just a simple calculation I am showing you so that you can understand that benefit of cap and trade system, which includes that overall emission reduction, encouraging the innovation and flexibility for company that they can sell or they can consume all the carbon power, gives them and empowers them to take a new step towards a better future. Clear? That's the cap and trade system. Now, Kyoto Protocol is a very key element which you have to understand here. Because Kyoto Protocol first time has brought in carbon trading mechanism. They have recommended that. Of course, it was adopted in 1997 and came into force in 2005. It was a groundbreaking international agreement aimed at combating the climate change by reducing greenhouse gas emission. If you remember our Kyoto Protocol discussion of lecture 1. As we approached, now COP 30, you remember what has happened in COP 29. It is essential that you reflect that why Kyoto Protocol failed, and the reason why it failed was these four. USA has withdrawn from the negotiation. They said that I'm not part of it. My carbon system is already working well, because you heard my story, right? In 1980, actually they faced a AC related issue. They brought in cap and trade. So I have a matured system. I do not want to trade with world. That was the first blow to Kyoto Protocol. Second blow was limited result. So emission cut fell flat after certain point in time. Yeah, under Kyoto Protocol recommendation of carbon trading, because they recommended CER issuance, which failed in India too. And a lot of companies are left with a lot of certificates without any value today. Third was economic fear itself. Countries were afraid that they were forced to comply rather than the developed nation who have emitted in past massive amount of carbon dioxide. And finally, weak enforcement was the another reason why Kyoto Protocol failed, because there was no observatory body. Nobody was ready to control this market, and that's why if there is nobody watching, nobody wants to perform. That is why Kyoto Protocol failed. There is a proper descriptive note which we have published on our LinkedIn page on why Kyoto Protocol failed and what COP29 has done better. That's up to you to read it because it has a lot of information. Let's go to Paris Agreement and Article 6.2, 6.4, and eventually 6.8, which is a critical element for you to understand if you want to understand carbon markets of today, not the past. Past anyway is gone. The Paris Agreement was adopted in 2015. If you remember our session 2, module 1 and session 2, module 1 and module 2, session 1. Paris Agreement we have discussed in detail. It was a global action plan which proposed that we will limit our global warming to well below 2 degrees Celsius and preferably to 1.5 degrees Celsius above pre-industrial level. It was legally binding to 189 countries out of 196 which signed the agreement. And that's why this agreement was most important agreements of all Conference of Party, which has held under United Nations Framework Convention on Climate Change. In short, we always know them UNFCCC or CCC, which has ratified this further later on in 2018-19. The Paris Agreement consisted of 29 articles, which outlines its framework and operational guideline. So remember that it has 29 articles. Out of that, we are learning only Article 6 today. Additionally, it has introduced 16 paragraphs, introductory paragraph, which is before you start reading that document, you will find it. And that there is a set of, which sets the context of this agreement, why this agreement has happened. And then they have created 7 appendices covering 139 additional articles. So it's a massive document to read. Yeah, but it's very interesting to read once you will start understanding carbon market, climate action, after the GHG sessions gets over. For sure, you should read. It's a must recommended. Key component of Paris Agreement is Article 6.2, which basically establishes a mechanism for countries, all countries who are following or cooperating voluntary in achieving their nationally determined contribution, NDCs, through the use of internationally transferred mitigation outcome. In short, people tell them ITMOs. What is ITMOs? It is internationally transferred mitigation outcome. Okay, so how you should trade internationally, you should exchange carbon credit is a mechanism which is covered into Article 6.2. It doesn't look a big article, but interesting article to read. Article 6 is divided basically in several important parts, but key ones which you need to read through is 6.2, 6.4, and 6.8, each addressing different aspect of the cooperation in ITMOs, internationally transferred mitigation outcomes. Understanding Article 6 of the Paris Agreement was focused on COP29 Baku, yeah, where in Baku the discussion held around Paris Agreement Article 6. Why? Because everybody wanted to understand that how ITMO can help stabilizing the carbon prices. Because most of the country out of 196 country, 189 country even who has committed have revamped, ratified their carbon markets regulations, including India in 2023 June. Yeah, they brought in new carbon market policies under governance of Ministry of Forestry, Mining, etc., which has launched which has been checked with the CEA. This means that country can work together. The actual meaning of 6.2 is, and the recommendation is, the summary is that whoever company which engages in cooperative approaches for achieving their nationally determined contribution, they can work together to reduce emissions and can transfer their reductions known as ITMOs. Okay. That's what it promotes, of course, voluntary carbon market. So it focuses on voluntary cooperation between the country, achieving their NDC. It allows for the transfer of mitigation outcome between the country, and it encourages use of robust accounting to ensure that robust account is a keyword which we have learned now under GHG protocol, right? So there is no double counting of emission reduction, and nobody tries to fool around anything. Article 6.2 basically stabilizes the mechanism for countries to voluntarily cooperate. Remember, voluntary cooperate is another important word. Yeah, this cooperation basically facilitate through the use of ITMOs, which allows countries to trade their carbon credits and achieve the emission reduction target more efficiently. What is the benefit? Of course, global cooperation is the first benefit. Robust carbon accounting adopted by all the countries which are cooperating with each other under ITMO is a second benefit, which is critical for maintaining the integrity of the carbon market. Otherwise, again, it will crash like it has happened in India. Current status is that while negotiation has resolved this issue, many outstanding issue related to 6.2 is still being negotiated in different other forums. Okay, so we are waiting that also to be released very soon, where we can see clarity on ITMOs. Okay, we are waiting for that. Case of Microsoft for carbon removal is one of the best example I can cite here. Of course, who has attended our session 1 and 2, they have already gone through this Microsoft Carbon initiative where they have 100, 100 and 0 initiative. You remember that, right? 1 billion they have committed. You remember that as well. And they have also committed for 2030 carbon negative and 2050 removing historical emissions. Correct. Now let's take one by one. Microsoft carbon removal strategy, which you are presenting today. I hope everybody is ready. That's why I took first hour discussing this, and the next hour we will have your presentations. Okay. So similar what you have done, Microsoft also has done a carbon dioxide removal strategy. What is their strategy? They are pioneer in the corporate approach of aiming ambitious carbon. Over a period of time, they have developed this strategy and adjusted it according to their own characteristics of carbon emission. The GHG emission they do, according to that, they have adjusted their parameters. Carbon negative policy, which is 2030, is one of their strategy, which makes them, and they are intending to remove more carbon than what they emit by 2030. That's the carbon negative. The goal that includes offsetting the carbon emission and active carbon removal. So both strategy they have taken. Carbon emission offsetting, the carbon market comes into play. Got the point? How the carbon market is related to Microsoft case? We have seen that the lines, green lines and the blue lines and the light green lines, that the blue lines, the dark blue lines in the graph, which shows that there are certain carbon emission which they cannot avoid, unavoidable carbon emission or GHG emission. For that, they are definitely relying on carbon dioxide offset purchases. Then, of course, historical emission is their second strategy of 2050, where company aims to remove all their historical emissions since their incorporation. Yes, from 1980s till today, whatever emission they have made, they will remove from the earth those emissions by setting a new standard and corporate climate action. Internal carbon pricing is another good example of Microsoft carbon removal, where they have set an internal carbon price. So if this is the incentive they are giving to their own internal team, that if you save the allowance part, which people are saving, if you save a amount, you will get a charge of $15. So they are encouraged, because if they are buying, of course, it is costlier than them. Even though they are buying from India, there is ITMO which play a role in between, and the charges goes little higher than what they have purchased from. So they are encouraging their own team members and different branches that if you reduce your emission or if you exceed your emission targets, you have to allocate $15 per metric ton for scope 1 and 2 emissions. And definitely certain scope emission 3 also been incentivized under their internal carbon pricing. So they created their own carbon pricing as a strategy. You are getting my point, mitigation strategy. This is one of their mitigation strategy where they are encouraging and putting a carrot and a stick for their own company. It's a massive company. Then there is an evolution of the pricing model, which they have seen over a period of time since 2020, when they have incorporated their new mitigation plan. The inclusion of a scope 3 emission also brought in 2021 onwards. Yeah, earlier it was only for scope 1 and 2, and there was a small incentive for a scope 3 reduction. But now, after seeing that scope 3 emission is a little bit sticky for them, and it is growing, if you remember that light blue graphs over a year was showing that it is leftover. Means it's not reducing, it's still going up. So for that, they have brought in supplier emission. They have included in the drive of broader supply chain sustainability, and now they are making all their suppliers aware about it. So key carbon credit purchase which they have done, significant agreements include 500,000 metric tons of carbon dioxide from Occidental Petroleum, 1.5 and 8 million metric tons from BTG Pactual Timberland they have purchased already, supporting the long-term removal goals. Clear? This is the case study of Microsoft carbon market and carbon removal. With that, we have a quick one more activity which we will do if the time permits. Okay. With that, we come to end of the carbon market. There are some small other topics as well, but all depends upon if we are able to finish our whole thing in time. Yeah. So if you really want to know a little more about building carbon offset, or you want me to cover it in next 5 minutes? Building carbon
Yes,
offset portfolio.
yes,
Okay,
yes, yes,
let's
yes.
cover that then. Building carbon offsetting portfolio requires four specific parameter you to adopt. The key topic which you have to understand here is that diversification of carbon offset is a critical aspect. What do you mean by diversification of the carbon offset? Carbon offset is carbon buying, right? So that portfolio should be diverse enough to compensate your characteristics of GHG emission. For example, if your GHG emission is very aggressive in nature, yeah, and it includes certain kind of gases, your carbon purchase should be accordingly done. How you do that? For example, if your GHG emission from energy inefficiency side, listen to me very carefully. If your GHG emission massively coming from energy efficiency and you have certain unavoidable energy consumption requirement like a data center, Bitcoin company has a Bitcoining mining, all that you can't avoid, right? And even though you are trying to change yourself, it requires a heavy timeline. You cannot do it in one day. In that case, what I will do if I am purchasing my carbon credits, I am purchasing from the renewable energy project. That's my right offset protect. Is it clear now? Are you, everyone, are you with me on this? Are you, it's very simple, right? How to diversify carbon offset? That makes sure that characteristics of your GHG emission matches with what is available in the market. Clear? Second, if I am into manufacturing of a timber furniture company, yeah, here the carbon purchase which I will do is from the reforestation or afforestation side of the carbon off credit providers. If I am into livestock, methane, right? Methane livestock measure is permafrost and methane, or somebody is doing drilling. In this case, I will go to oil and gas companies who are trying to create carbon credits into methane side, and energy efficiency remain the energy efficiency. If I really cannot control my energy side, I will go for energy efficiency as a even offset program. This is how you diversify under U2 system. Now there are several trends and outlook is happening. Take a screenshot of this page because this will remain there with you for long. Why? Because on right hand side is a mechanism only developed for the portfolio optimization. The software like ITM platform, we use Breathe ESG platform, all of them has one particular dashboard that how you are offsetting it. Yeah, how you are offsetting that portfolio need to be presented. So how many total project these guys are undertaking? 14. What are different types? So one project is completely consulting, second is the change management, third is research studies. All these are coming as a part of their offsetting portfolio. There are different feature of offsetting portfolio and there are different standard for carbon offsetting portfolio because you need somebody to control this as well, right? So there are three kind of offsetting portfolio, or you are a carbon. You somebody was asking in first lecture, right? That how I can make sure that I am buying a right carbon credit, or when I have a carbon credit opportunity, how I should make sure that people buys my carbon credit. So these are the three major international companies which who does this verification for you. Which are these three? The first one is verified carbon standard. So VCS is a mechanism which is most widely recognized carbon offset standard right now in the world. VCS, remember that, yeah? VCS is one of the authority which authorizes, sells, buys, and even certifies you for your carbon, emissions or carbon credits. Basically, it is managed by a company called VERRA. Vera. Vera is that company. It's a non-profit organization, and they provides a robust framework which you can adopt whenever you plan to buy, offset, or sell a carbon credit, whichever you want to do. It is designed that, and it ensures if you follow their standard, it ensures that there is a real verified reduction in the greenhouse gas emissions. Project types which they certify, of course, it is listed. You can see on the left hand side is afforestation, reforestation, methane capture, energy efficiency, renewable energy. All this, if you are doing or buying from, then VCS is the best standard to use. The second one, of course, the second one is CDM, which is Clean Development Mechanism. This is another a standard which overlaps with VCS, so it's nearby VCS. Okay, so as if you are verified by VCS, definitely you will get the certificate from CDM as well. And they do it specifically in area of renewable energy. Remember that renewable energy and methane capture clean development mechanism. In short, CDM is the best mechanism to use. Yeah. And then, of course, there is one more, which is Gold Standard. Gold Standard is a certification standard developed by Gold Standard Foundation, GSF. They are well known as well. It's American non-profit organization founded in 2003, which focuses on ensuring highest level of environmental and social integrity of carbon offset project. So they also look into the social integrity part. So they do not only focus on the environmental, how that impacts society, they also give you credibility for that. And their standards help you to identify those benefits as well. So it has a two bottom line. Of course, all of them you can convert into social impact. But I'm just saying that gold standard has a clear cut mechanism to do that same. Additionality of permanence, etc., is also one of the rules. Social environment co-benefits exist here. They have a strict verification and monitoring system. So GSS is little stringent, and they give you certified emission reductions certificates like CER. In India, it used to happen by our local consultants and local verifiers. There are several companies which are doing in India as well. Yeah, but CER suddenly became irrelevant after new policy Indian government has launched in 2023. Still, we call them CERs sometime, but it is not a name which is authorized by the authority and body. These are the future outlook and trends which are critical to understand. Now that I come to the end of our session on carbon markets, and module 5 is covered. I start